Welcome back to Everything Tesla Stock, everyone. It's hardly news that production issues are making it difficult for Tesla, like many other automakers, to increase sales. Given the current difficult market conditions, it is only reasonable to assume that investors will want to secure their investments and, if they can, turn a profit. Investor judgments about the stock are likely to be influenced by warnings such as the one issued by Chamath Palihapitiya. Palihapitiya says that supporters of Tesla should brace themselves for what is ahead for the automaker. This video has further information. To be informed about all that Tesla is up to, remember to like, subscribe, and enable bell alerts before we get started. All right, enough talking. Let's start the video. Venture capitalist Chamath Palihapitiya, a Canadian, offered some predictions about what he sees in store for Tesla going forward. Palihapitiya is a long-term bull for Tesla and the stock market in general. He is a former executive at Facebook and currently manages the venture capital firm Social Capital. Since he purchased Tesla's convertible bonds in 2017, the CEO has been bullish on the company, stating that it was his favorite investment at the moment. Similarly, a while back, a wealthy investor asserted that the stock of Tesla might be valued 3 times its current value, making Elon Musk, the company's CEO, the first trillionaire. Palihapitiya voiced his concern about why people would want to sell a stock that is performing well when he recommended investors not to sell their Tesla shares. He continued by saying that shareholders should cling onto their stock instead of bending to temporary gains. The CEO of Social Capital also asserted that Elon Musk, the CEO of Tesla, was a skilled industry analyst and has long been regarded as one of the world's most significant entrepreneurs. In related news, Palihapitiya stressed that Tesla's growth is much more than just electric cars when speaking to CNBC about the firm's energy business. He also noted that Tesla's renewable energy components have the potential to make the EV company worth trillions of dollars. The stock investor said at the time that Musk was working on developing a method to capture energy, store it, and subsequently use it to support human productivity and combat climate change. Given that Elon Musk recently disclosed the company's intentions to expand its solar and energy storage business and added that it promises a sizable clean energy industry in 2022, it might be argued that this is an accurate picture of Tesla's future. Although supply chain limitations have hampered Tesla's expansion as an energy company, Musk says that if the problems with the supply chain are fixed, the company still intends to boost production and deployment more quickly than it does vehicle production. In response to rising demand, Tesla's CEO also said that the company plans to construct a plant specifically for the utility-scale Megapack energy storage product. Palihapitiya asserts that Tesla is a distributed energy company and projects that its valuation will rise above present levels in the future. Remarkably, Palihapitiya just liquidated his Tesla stock, despite having expressed nothing but positive things to say about the company and making several bullish predictions. For Tesla's investor base, this was a significant event because the company's long-term bull had to sell off his shares. Palihapitiya claims that the action was taken to find funding for more investment proposals. He went on to say that in order to carry out these ideas, there must be sufficient finance because he does not have an endless supply of money. Nonetheless, he acknowledged that while he remains optimistic about Tesla, his analysis of the business has evolved slightly. According to Palihapitiya, the EV market appears to be undervalued and is only going to get bigger as other businesses enter the market and progressively take on Tesla as major rivals. With the recent introduction of a program targeted at tracking down and analyzing the driving behaviors of owners of the Cadillac Lyriq, the first electric model of its premium brand, Detroit automaker General Motors has really pushed things a step further. In an effort to increase sales, the automaker also extended a $5,500 discount to prospective buyers in exchange for their interest in improving the car's features and services. Ford Motor Company also just reported excellent second-quarter profits. Given that Tesla is moving toward electric vehicles, the corporation seems prepared to overtake the automaker in the market. It will probably be compared to Tesla in a lot of aspects. Additionally, the business has operating cash flows of nearly $3 billion. which it may utilize to fund its ambitious aspirations to increase EV production. With the level of competition for Tesla rising, the business will need to step up its game to stay at the top of the EV market. The rising rate of inflation, which has an impact on not just Tesla, but the entire electric vehicle sector, is another element that might have led Palihapitiya to take this particular action. In a podcast, the CEO and creator of Social Capital expressed his worries about growing inflation. Palihapitiya stated that he believes high inflation is a permanent feature of the market. He also expressed doubt about making investments in the current market. It's also unexpected because, particularly in recent months, Tesla has had significant challenges due to inflation. The company had difficulty keeping up with the growing cost of supplies and raw materials, which resulted in an increase in the cost of its goods. Musk said that while the firm wants as many people to be able to buy and have access to EVs as possible, it has been extremely challenging due to inflation, which is at a 40 or 50-year high. Musk went on to say that, in his opinion, the official figures significantly underestimate the real level of inflation. According to him, suppliers are putting a lot of pressure on manufacturers to raise parts prices by as much as 20 to 30% between now and the end of the current year. According to recent reports, Tesla anticipates that its factory's capacity to produce will be limited by a protracted supply chain crisis that will persist for the remainder of the year. After the electric vehicle manufacturer Tesla announced a lower than expected decline in quarterly profit, the company's stock price increased from $18.76 billion in the first quarter to $16.93 billion in the second. Tesla's overall revenue decreased. Given Palihapitiya's focus on the consequences of inflation, this may indicate that investors need to brace themselves for sudden fluctuations in the company's stock price. Continuous price increases for Tesla automobiles could have a negative impact on demand, which would eventually hurt earnings and stock value. Along with inflation, Tesla has been facing other market difficulties that have thrown the stock into a series of up and down trends, particularly in the wake of the lockdown at Tesla's Gigafactory in Shanghai, China. For the quarter ending in June, Tesla's new car sales and deliveries decreased by over one-fifth. Tesla claims that supply chain disruptions and a string of COVID-19 lockdowns in China are to blame for the decline, citing the closure of the facility as a major factor in the company's production issues. Analysts had projected that the corporation would supply 295,000 new automobiles over the next 3 months, but it delivered only 254,695 of those cars. The EV company is confronted with staffing and supply chain issues at its new Berlin manufacturing, in addition to the production challenges in China. Despite the declarations of Tesla officials that they anticipated a gradual ramp-up at the Berlin factory, production levels appear to be lower than anticipated. In April, May, and June combined, Berlin workers produced fewer than 9,000 vehicles, despite multiple delays in starting the production. This can raise concerns for investors such as Palihapitiya. Similarly, the recent sale of almost 75% of Tesla's Bitcoin assets raises the possibility of a financial crisis for the business. Recalling Palihapitiya's guidance on selecting the best technological investment, it appears that the stock investor still has some favorable opinions on Tesla. In an interview, he described the 3 stages in which technology businesses evolve. He says there's the product market fit phase, the scaling phase, and the experimental period, which most companies can't make it through for 5 to 10 years. Comparing it to Tesla, Palihapitiya thinks that the electric vehicle company has achieved an exceptional return, moving past the experimental stage and into the product market fit stage, which is poorly understood by most investors. The true opportunity, he continued, is in understanding each company's current position and the source of its future returns. It's safe to conclude that Palihapitiya thinks the stakes may be too high, even though he has invested in almost any working stock and may still be bullish about Tesla. As a result, investors may choose to reevaluate their holdings in the stock while keeping in mind that Tesla will face numerous market obstacles. Because the stock market is always unpredictable, it's critical to be prepared for unforeseen obstacles. What are your thoughts on these cautions regarding Tesla? Do investors have cause for concern over Tesla's future? Please share your thoughts in the comments section. And while you're here, click on any of these 2 videos to view it on your screen. I'll see you over there.